Hello, everyone. Welcome to today's show. My name is Mike Finale, Vice President of Marketing at Asure. And today we're going to unpack, I think, a timely topic around health savings accounts, HSAs versus flexible spending accounts, FSAs. There's a lot of similarities. There's some really important differences. And as the trend continues to shift towards legislation and benefits, going more and more towards employees as a recruiting and retention tool, even for small employers who may not be legally required to provide health benefits, just as we face this war for talent as a way to attract and retain employees. So we're going to unpack the differences in how you should be employers should be thinking about choosing differences between HSAs and FSAs, excuse me. It's acronym soup, it's a tongue twister. And with me today is Heather James, regular guest on the show and manager of our benefits operations down in Tampa. So welcome today, Heather.
Thank you. Thank you for having me.
Okay, so in HR, we have all these acronyms. Can you just kind of, let's start out with just some definitions, right? So can you just kind of unpack what are HSAs, what are FSAs, and then we'll kind of jump ahead and start talking about differences, but just let's define what they are first.
Absolutely. So your HSA is going to be your health savings account. So this is basically, money that you're contributing into your account, as well as, even your employer, to allow you to create that savings for, those medical expenses. And the nice thing about your HSA is it really truly is an ongoing savings account that you can take from year to year, to job. A lot of people like to classify it as like the new 401k for medical, because it really is a retirement savings, especially as you grow older and you stop working. You have all those funds in there that don't expire, that you can use for your medical costs as those get costly, as you need further prescriptions, suffer health incidents, things like that. It's really a nice little nest egg to have there. Your FSAs are flexible spending accounts, and they are just what they are, flexible. They're not attached to medical plans. You don't have to have different plans that you provide to your employees. This is something that employees can elect, and it's fully contributed by the employee, and it is a pre-funded benefit. So what you're electing for out-of-pocket expenses, for medical, dental, vision, co-pays, co-insurances, over-the-counter items, dental cleanings, these funds are available to you day one, and then you have the remainder of the plan year to pay that back during your payroll deductions.
So I know we're gonna dive deeper into each one separately here in just a second, Heather, but maybe just a little context. Can you talk about the timeline for when we first saw HSAs, when we first saw FSAs? What is the intent of legislators as these types of spending and savings accounts have been created in the first place? So what's the background here?
Yeah, so I mean, HSAs have always been designed to help out the employees with their deductibles. So HSAs are, kind of paired along with your health savings account when you're enrolled in a high deductible health plan. So originally they were designed to help just with that, the high deductible. So a lot of people were, contributing towards that, and sometimes their employer contributes to that to simply pay for those high deductibles, especially as insurance premiums and deductibles go up, all the time and every year. The more funds you have in there to assist with that. But that's originally what they were designed for, was for the helping of the employee for those high deductible health plans. FSAs were really kind of put out there early on to help with all those out-of-pocket expenses. So the big thing that I always like to to refer back to is remembering when you're electing an HSA versus an FSA. Your HSA helps you save for the future, where your FSA is allowing you to save money for those upcoming plan year. So the FSA has always been designed to help with, multiple out-of-pocket expenses. So, say you have a situation where, you have a pretty hefty dental bill coming up because you need surgery, or maybe your kids need their wisdom teeth taken out, or maybe you're getting braces. The FSA is perfect for that because sometimes when things are, all at once, when you have dental surgery, maybe your first portion of that is like $1,000. The FSA allows you that flexibility to use that money all at once to pay for that. So that's kind of what that's always been designed for with the FSA. We did have some time throughout the year where over-the-counter items, were always covered, and then they took that away about 7-8 years ago. And then with the recent pandemic, they've brought those back. So that's going to help employees from a standpoint of purchasing Advil and ibuprofen and cold medicines, first aid kits, Band-Aids, things like that. So that's always been what the FSA has been designed for, was to help, members and their families out with those unexpected expenses that, come at you sometimes out of nowhere.
And so if I can maybe provide some more context for our listeners today. So tell me if I'm characterizing this right. So going back, it's a couple decades now with FSA. The rub here has been the accelerating cost of healthcare, right?
Correct.
It's the inflection point is really steep now, and it was thought to be steep, 20 years ago. The intent here has always been how do we get a handle? How does Washington, how do our legislators think about helping to bend this cost curve? And part of the psychology here, whether it's worked or not, is around consumer-driven healthcare, right? That if you have a high deductible plan, you're going to be out of pocket for this money, and you're going to really pay attention to where it goes. You're not going to just take the old HMO when the doctor orders 20 tests, and yeah, I'll take all the services I can get from my fixed fee. If you're out of pocket, you're really going to inspect and shop around for the good value in your healthcare. And so same thing for FSA. So do you think I'm saying it correct that the intention behind HSA and FSA has always been a way to kind of offset the increasing expenses of healthcare in a way that put the consumer more directly in that process, evaluating services, what is required, what's not required, shopping around for the best price? Am I saying that right?
Oh yeah, I mean, it definitely does, help the member that's, looking into their expenses for the upcoming year. When you're going through open enrollment with your company, you're trying to figure out, okay, what do I have? Like, I think it helps employees pay more attention to their health and upcoming, health checkups and surgeries and things that they have done. And it definitely makes them kind of realize, okay, what do I need? Like, what's going to be best for my family this year? And, having these available to your employees makes a huge difference, because it does help them invest in their health and their future as well.
Right. And so we're going to unpack the specifics of FSA, HSA differences, how to choose, et cetera. But I think the way employers should be thinking about this is it's a way for your employees to help offset their healthcare costs. And so whether or not this actually bends the cost curve of healthcare is still a national debate, just like, this all probably goes away if we had unified national healthcare, right? So we're not for or against any of these things. We're just trying to share the best information we can for employers. I think we would advocate, Heather, tell me if I'm wrong, we would advocate that you consider strongly, if you don't currently offer HSAs or FSAs, that you strongly consider this as a true benefit to your employees, as a way to help reduce the cost burden of healthcare for them. Am I saying that right?
I would 100% agree.
And so because these things can be a little complex, especially smaller employers, I think to a large extent have avoided some of these things. And with Affordable Care Act, the ACA, greater than 25 employees by law, you have to offer. So a bunch of these smaller companies have been kind of forced into this conversation. But I just really want to emphasize, when the war for talent has hit Main Street, and unemployment levels are what they are, and job participation rates are what they are, this is not just a post-pandemic thing. The scarcity of labor is going to continue to be a problem for another decade or more, right? And so think of FSA, HSA as truly a benefit, something you can offer to employees as a way to attract and retain them. So hopefully we take some of the mystery out of that today. Anything you'd want to add just as an overview before we kind of go into the more details of what is inside of an HSA?
No, I think you're absolutely right and explained it. It is really truly a value add, especially for your employees. Employers taking this type of acknowledgement into their employees' health and helping them pay for that and finding avenues for them to be able to afford those costs, I think is huge.
Yeah, yeah. Okay, so let's get into in more details. Can you kind of unpack what specifically is in an HSA?
Yeah, so your health savings account, which is also known as the HSA acronym. So this is going to be a savings account for employees that are enrolled in a high deductible health plans. So this allows you to set aside money on a pre-tax basis to pay for those qualified medical and some dental expenses. So some of these consist of co-payments, deductibles, co-insurance, even over the counter. So sometimes a lot of people don't realize that it does cover those. And there's a lot of different places that you can go to kind of unpack those, those costs of over the counter. So, we utilize, HSA store a lot. That's a popular one to go out to and just kind of look there and see, what's available, what's covered. Contributions can be both employee and employer. So that's always, a popular one for employers to be able to feel like they can contribute. So, that's always nice to help pump up that savings plan for the employers. So they are limited to a maximum of each year. So your employee, if you're enrolled in an employee-only plan, you're looking at a maximum as of 2022 of $3,650. So that's $3,650. And for a family, you're looking at $7,300 for that family coverage. So you must have the qualified high deductible health plan in order to meet those and to be able to contribute to that HSA. But again, I always like to emphasize on the fact that this truly is a savings account. It's not a use it or lose it. You can carry these funds with you from company to company. Even if you, change health plans in the future and you move to, like, say, a PPO plan, you can still have your HSA in there. You wouldn't be able to contribute to it, but those savings are still there. You're not going to lose them. Say you switch jobs and go to a new employer, you can actually transfer those funds from your existing HSA over to a new HSA bank account if your new employer is offering a high deductible health plan with an HSA as well. So there's no, rush to use all those funds because you're going to lose them at the end of the year. That is something for you to carry on from, to the future. So that's one of the important parts of the HSA that I like to stress on, is that you don't lose those funds. And then, of course, just remember, when you're deciding, what you want to contribute, please remember that the max HSA contribution includes both your employer and employee contributions too. So sometimes I know there's confusion surrounding that, but that's pretty much the gist of it. Again, it's something that you can save, or it's something that, you can continually, use from day to day, for out-of-pocket medical expenses. One thing I like to add to the HSAs is you're not opposed to having a type of FSA plan with your HSA. Oftentimes employers will pair this with a limited FSA, and we'll kind of dive in more to what an FSA is further into this. But the limited FSA is similar to an FSA, but it is going to allow you to have that with your HSA so that you can pay for those additional dental and vision expenses that come across the line too. So we'll go more into that and unpack that a little bit later, but I just wanted to make sure that I reference that, when talking into the HSA.
So the big thing here is, and tell me if I'm wrong, the biggest benefit to your employees is this is pre-tax dollars, right? So if they're in a high deductible plan, so high deductible plans have come in vogue as healthcare costs have just skyrocketed, right? And so rather than, if you think about how our healthcare services are paid for and provided in the US, it used to have the concept of insurance, that you paid for your healthcare, and insurance was if you had the heart attack, you have cancer, you got hit by a bus, it's the catastrophic events, right? And over time, insurance really just became the way in which we paid for our healthcare services, including just day in, day out doctor visits, right?
Right.
And so as those healthcare costs just skyrocketed, the premiums also, health insurance premiums have skyrocketed. And so these high deductible plans have really become in vogue to make, just to simply make the premiums affordable for most employees.
Absolutely.
Knowing that you're going to be out of pocket for the high deductible, this is simply a pre-tax way of saving up that money and because it's there's no use it or lose it. It can be banked for any time in the future. Now let's get some specifics. The pre-tax, we're talking only federal dollars, or is this pre-tax for state taxes or local taxes as well?
So this is your federal and income taxes for your HSA. So it is, pre-taxed prior to your paycheck being taxed.
So the net answer is there's no state or local tax to apply because it's already been fully deducted. It's from the net pay, right?
Correct.
So because this is pre-federal tax, there's no downstream tax impact. So if you're in a 22% tax bracket, that means you literally just got a 22% discount on all of your HSA qualifying expenses, right?
Absolutely.
And can you talk then about, Heather, about how, so most employers, certainly we do this in our payroll systems for clients, but most payroll systems, it's a simple deduction, right? So you have the benefit plan that you have to set up. Employees elect those options through an open enrollment period, presumably, and just like you'd have any other deduction coming out of a paycheck, these funds are deducted. They are then funded into an HSA account. Can you talk through the mechanics of, is this the employer's bank account? Does it have to be some third-party fiduciary? Is it the payroll company? Where does this money live? And then downstream, how does an employee access their money to pay the bills?
Yeah, absolutely. So these HSA funds, the contributions that you're making or the employer's making, these actually do live in a bank account. So it can be somebody that the employer partners with, or the employees can actually open their own HSA account. So those funds do have to live in a health savings account that is supported from a bank. Part of that process too is that you do go through the Patriot Act testing. So just like when you're opening your own personal bank account, the HSA is very similar when you're opening that bank account, is because they want to verify your identification. They want to make sure that there's not a fraudulent person, trying to open up that account for you where these, savings are going to live. So they do have to go through a bank. Most oftentimes the bank will provide login credentials, whether it's through the employer or if you're using that bank individually, but they will provide login credentials and registration information for you to access those funds. So you do have the ability to have access to that bank account. You can see the funds as they grow. You'll be able to, in some cases, have a debit card associated with that once the bank account is open for you to use those funds. Also in some portals, some banks that you work with, they also have a way for you to go in there and set up, automatic payments to your providers. They also have ways for you to pay yourself back. So, if for instance you go and maybe you don't use your card, maybe you spend those funds out of pocket, you have the ability to go in there and reimburse yourself through your HSA bank account, or again, you can set those funds up to be automatically distributed out to that provider. So maybe you have an ongoing appointment that goes on, pretty regularly. You can actually set up bill pay with some HSA bank accounts, to be able to send those funds off to your provider. And then again, with the HSA, those funds have to actually be incurred to be able to use them. So it's not, just because you plan to elect, $36.50 in contributions for the year, you have to actually wait till you've incurred those to use them. So if you're getting like a biweekly or semi-monthly, contribution, once those funds hit your bank account, then they can be used. And then again, like I said, you can use those individually through an HSA bank account or one that your employer provides, maybe through a third-party relationship.
So Heather, is the onus on the employer or the employee to actually set up the HSA bank account?
So it depends. Oftentimes I see if employers are not contributing to the plan, it would be on the employee. Sometimes they can work with their own bank. Sometimes it's, they go and search for that bank for any type of HSA bank. A lot of banks do supply that as a service. But oftentimes what I do see from a employer side is if they are contributing, they will provide the relationship. So, even, taking this step back a little bit, maybe you have an HSA bank account with another bank, and then you start working for, say, Asure. You don't have to move your funds to the bank that Asure has in place, of where they deposit those funds. You can actually still keep and utilize your retailed HSA account to maybe use up those funds, or you have the ability to transfer those funds to your new employer's HSA bank account that they've set up for you. But most times I do see employers will provide that, whether they're contributing to the HSA or not. From a contribution standpoint, they will provide a relationship for the employees, to be able to make those contributions to, especially because it's just easier. That way they can do it through their payroll deductions.
So if you're an employer and there's a benefit to an employer to providing some, whether they pay for all of it or they do a matching or just some type of contribution here, because they are gonna, in a high deductible plan, the employer will have lower premiums, not just the employee will have lower premiums. So employers have a vested interest in doing this. And so is most of that usually done then through their insurance broker who they set up all these health benefits?
Yep, oftentimes they do get the resources of their insurance broker that will point them in the right direction and the right companies to use.
And so, for our example, the services that your team provides, it's safe to say that a lot of times you're providing those services indirectly through insurance brokers who bundle HSA plans in the insurance plans that they provide to employers. But then also your team provides those same services to employers who want to carve that out and come directly to us. Am I saying that right?
Correct. And having a third party, like Assure, it is helpful because we are kind of the in-between between the member and the bank, or even the employer and the bank. So, we help provide, just kind of a better user experience, a portal that's a little bit more explainable, but then they also have a team of resources they can reach out to with just getting assistance on, their contributions or how they can use them, setting up those accounts. Maybe they need assistance through the Patriot Act testing. They have a dedicated team here that they can reach out to, and we can assist them along the way. We can assist them with, if they get locked out of their bank account, getting statements to them, things like that. So it's definitely a great resource, if you have someone assisting you with that process.
Yeah, and the reason I go here, I try not to make these discussions an overt sales pitch for Assure. I just want to be value add. But the reality is that there's a lot of moving parts, in especially small and mid-sized companies who have not previously offered HSA. It can be a little intimidating, right? And so if you're not getting this packaged from your broker, you could do this on your own, right? But there's a lot of legislation to know. So we'd love it if you use us, but we would highly recommend that either procure these services, HSA capabilities, through your broker as a part of a bundled insurance and health plan, or use some third party to administer this, because we're trying to educate here in 1 hour that all that has to do with the HSA and FSA, but there's a ton of legalese details. The devil's in the details, as always. Am I saying that right?
Correct.
Yeah.
Definitely. Anything that's through the IRS, you always want to make sure you have the comfort of that knowledge, for sure.
Yeah, right. And just the ability to, even if you had the legalese part of it down, just as a resource to explain to employees. So if an employee has been in, say, some PPO, HMO kind of a plan forever and it's just too darn expensive, they switch to a high deductible plan in the next open enrollment period, and that comes with an HSA. They're going to be new to HSAs, and who's going to explain all this to them as they have questions? So there's a lot to it. Anything else high level that you'd want to talk about HSAs?
No, I think we've covered a lot of it without going too overboard. There's a lot to it, but I think we hit all of the important points on that.
And we'll probably do another webinar another day that will dedicate an hour to nothing but HSAs. But I think the purpose of today is an overview of HSA, overview of FSA, and then the differences, and then how we should think about choosing. So let's use that as a transition point. So give us the definition and explain what an FSA is and how is that. We'll talk more specifically the difference in ahead in the conversation, I guess.
Yeah, absolutely. So your FSA, also known as your flexible spending account, or you've also heard it as a flexible spending arrangement. A couple of different lingos go along with the FSA, but this can be established by the employer or for their employees. The account allows you to contribute a portion of your regular earnings, so employers can also even contribute to an FSA, but often this is all employee contributions. So the distributions from this account must be used to be reimbursed for qualified benefits related to your medical, dental, or vision expenses. So this is going to be, again, another co-pays, co-insurances, out-of-pocket for over-the-counter, prescriptions, any dental services, cleaning, vision, eyeglasses, exams, things like that. So there's so many things covered under the FSA that you can utilize. So it's definitely, what it's named. It's flexible, so you can use it towards all those types of plans and services. The only thing FSA does not allow is for anything considered cosmetic. So that's going to be, like your teeth whitening. If you want to get that sunglasses, at the eye doctor that aren't prescription, that's considered cosmetic. Things like that. So there is, oftentimes when you're utilizing an FSA, you will see those receipt requests for like substantiation. So oftentimes, whether you're using a third party or the employer is managing this FSA, you are required to keep those receipts for your FSA expenses, should you ever be audited or asked to substantiate a claim that you've used. Because keep in mind, especially if you're using like a debit card that's associated with your FSA, that card's going to go through, when you're going to your medical, dental, and vision providers. So oftentimes, there is kind of an audit period where, the vendor or third party may want to verify those purchases because, one, they're looking to make sure that you're using the contributions, in the plan year you contributed them, and they're also wanting to make sure that you're using it for, something that's actually covered too.
Heather, can I stop you for a second? So you referencing a card, you and I know what that means.
Yep.
Employers who have been providing HSA and FSA plans for a while, they know what a card is. But for our small business listeners who are thinking about or just learning about it, but have never offered, say, an FSA before,
Sure.
What is this card that you're even talking about?
So when you get an FSA, the employer has the option to offer a debit card along with your flexible spending account. So these funds that you elect, are pre-funded and available to you day one of the plan year, and they can be placed on a card. So whether you're using the card or whether you don't use the card, you have the way to submit those claims manually to get reimbursed. But if the employer is offering that pre-funded debit card, you can simply just go to your doctor's appointments, pick up your prescriptions, some cases over the counter if you're going to purchase things, at the pharmacy, you can simply just give them that card, and the funds will take off of your flexible spending account. So again, that is a pre-funded. So if you elect $1,000 and your plan year starts 1/1, that card, if distributed to that employee for their plan, will have that $1,000 on there for you. Now you'll have all plan year to reimburse, that plan back, through your payroll deductions. But if you are using a card, those funds will be available to you on that card. Or whether you're, not having a card, if you don't have one in place, for that plan, those funds are still available to you for you to submit those manual claims against that. And then again, you have the whole plan year to pay back those funds via those payroll deductions, but you will be able to use them up front, which is great in situations, especially if it's out of the blue, maybe suddenly, you cracked a tooth and you need to go have dental surgery. It's really, really nice to be able to have those funds available to you versus waiting till you incur them each pay period and having to save up for an emergency.
And just to be clear, I'm going to go back to the cards. So whomever you go with, whether you use us to administer your FSAs or a different source, we're literally talking about Visa, MasterCard backed debit cards. So this is not some special closed network that you got to find out whether your provider accepts or does not accept the card. The card truly means it's a debit card, same as a bank debit card, that your employees could use this money on any qualifying medical expenses, right?
Correct. Yep, and you do have the opportunity to just use that as a credit card, or you can also be assigned a PIN number, for extra security measures. So, if you are getting a card, you can request a PIN number for that card to use it as a true debit card. But, like you said, Mike, it is a true Visa or MasterCard, very similar to how you would use, any other card that you have on hand. But it's triggered and it's set up and sophisticated enough to know where you're using that. So it's, based on merchant category codes that are set up behind the scenes on that Visa or MasterCard. It's going to know when you're at the doctor's office or at the hospital, or if you're trying to buy shoes at the shoe store. If you try to pick up a pair of shoes or go shopping at Macy's, it's going to decline that card. One really great feature about the card too, oftentimes is when you're purchasing, so maybe you're, at a local pharmacy and you're buying, a Diet Coke and some Advil. The card is sophisticated enough to know within that local pharmacy that the Diet Coke is not covered. So it's going to go ahead and deduct that amount off your card for that Advil, but it's going to ask you for another form of payment for that soda that you're trying to purchase.
Yeah, that's hugely important and just simplifies things so much. I mean, it's not like a business expense report where you have to manually line item out what was reimbursable expenses versus not, because these cards are all tied to the merchant codes and therefore the products and service types. And by law, these healthcare providers must set those merchant codes up properly. This all happens in a very automated fashion, right?
Correct. Yes. And it's great. I mean, the card, that it's able to do that and be able to be sophisticated enough to know where you're trying to purchase that is a great asset, especially for the employers too, because, they want to make sure that, their employers are using those properly and they're using them at the right places too. So it's a huge security on that card too that provides protection.
So I won't steal too much from the future of our conversation here, but we did talk about HSAs. It truly is a savings account, right? So you contribute money, your employer might contribute money, you contribute money. Either way, it's a savings account. And if you don't spend the money on qualifying expenses, it just banks and rolls. That's not the case with that FSA. I know we're going to talk differences here in a bit, but just speak to the use it or lose it if you could.
Yep, absolutely. So the use it or lose it for your FSA is truly what it is. So if you have funds left over at the end of the plan year, now the employer can decide if they want to have, run out periods and rollovers and grace periods. I know that's probably another whole webinar in itself, unpacking what the three of those things are, because it's usually a very common misunderstanding of how those work. But, for example, for this call today, if there is a run out period, so say the employer allows 90 days for employees to still spend those funds, at the end of that plan year, they'll have, say, 90 days. So, your plan year goes from 1/1 to 12/31. You might be given an additional 90 days to submit those claims that would have incurred from your previous plan year. But once that 90 days is up, and if the employer's not offering, a grace period or a rollover or anything like that, you could potentially lose those funds. So it's, depending how the plan is set up, eventually those rollovers and runouts and grace periods end. There isn't always an end date associated with it. So, you could potentially, if you're not paying attention, or if you over elect or not even realize what you can still spend those funds on, you could potentially lose those funds. So it is important to make sure you're, using like an FSA calculator, when you're trying to determine, what you're electing for that year, or at least educate yourself enough to know what you can spend those on so you don't lose those funds. Because like you said, Mike, with the HSA, that's something you carry on and move from year to year, where your FSA does have an expiration date on it.
Right. And this is always the reason why FSAs have been hurt for participation, right? So there's the same pre-tax value. So this is real hard savings, because you get to stick the money away before taxes. So it's tax-free money. And so again, if you're at the 22% tax rate, you're literally saving 22% on all those expenses. So that's a lot, right?
Yeah.
But there's always been this fear of, okay, what if I don't use the money that's in that? So I've had my money auto deducted from my paycheck in funding this FSA account, but I don't use the money. I could have blown all the potential savings, and therefore it's not worth it to me. What's your advice to employers to help them navigate that conversation, to help their employees still take advantage of the really big benefit of an FSA?
Oh gosh, the biggest word I can use is just education. The education is the big part of that. Making sure, especially like if you're using like a third party, that through a broker or through your employer, they will help with that education piece. So, internally here for us, that's our biggest thing. When clients go through the renewal is, we have participant guides and welcome letters and, flyers for some of the partners that we use, that gives them additional education that they can read up on. Open enrollment meetings, having someone speak to these plans, that's the biggest thing that I can recommend, is just education. Because I know internally here for ourselves, we get a lot of phone calls where employers or employees say, oh, I didn't know you could buy that, or oh, you can use it for that, oh, I didn't know that. So it's the education piece is huge, and I think a lot of people are scared to sign up for it because they don't want to lose their money. But I think once they realize the amount of things that they can purchase to utilize those funds, I know for myself, I run out almost every year well before the end of the plan year, and I'm like just it's for the new plan year to start. So
Right.
I think just education is probably the biggest thing that I could say, is just anything that you can get out in front of those employees so that they understand how they can spend these funny, it is a value for everybody.
And if you think about going back to the purpose here, so we'll discuss strategic reasons to choose HSA versus FSA, but especially smaller employers who may not even be required by law to provide health insurance because they're smaller than the ACA requirements. If the reason you're providing plans like this are to recruit and retain employees, then communication is a huge part of that anyway, because you're literally marketing your company to the marketplace, to prospective employees, and here's all the benefits. So the communication part is certainly important, but it's way more important than just let me give my employees some good education during the open enrollment period. This has got to be something that is just part of my marketing story, my employment brand story, starting at recruitment and part of onboarding, and certainly carries through the life cycle of the employee. Anything else you want to add on FSAs before we start talking about key differences?
No, I think that pretty much covers it. Like I said, my biggest thing is just the education, just getting out all the necessary information out to the employees and even employers, helping educate themselves, whether they're doing that through their broker or a third party, just understanding these features. Because you brought up a really good point, is a lot of people don't realize that you don't have to have a health or dental or vision plan in place for your employees to offer a flexible spending account. So I
Right.
think that's education. That's my takeaway from that.
Yeah, right. All right, let's start talking about some of the key differences. So maybe I don't know if you had an order in your head, but I think the biggest one is always this: use it or lose it versus not use it or lose it. So because they both essentially have the same different contribution limits, but the same tax benefit, right?
Correct. Yep, absolutely. That's probably the first one on my list would be, the use it or lose it versus, being able to carry it from year to year. So those are the two big differences between those. Is your FSA does have an expiration where your HSA does not. Um, you know, FSAs do have a little bit of wiggle room, again, depending on how the employer sets up their plan and builds out their FSA. There are opportunities to give employees a little bit longer, if they need to submit those last minute claims or maybe have a rollover where they, some of those funds can be moved into the next plan year. But again, it's all time restraints. So it's all going to expire at some point, where your HSA is not going to have that. The next, item would really just be your contribution limits. There is a max set up for your FSA, just like there is an HSA. But the one thing I like to point out on the FSA that's a little bit different is, it's not really segregated by employee or family or, employee plus children. The FSA is really a set max amount. So the IRS released this year for 2022 that you can elect up to, $2,850 for your FSA. One thing that I like to point out that a lot of people don't realize is you and your spouse can both have an FSA. They can work at completely different employers and you can both take advantage of that full election amount. Where you're a little bit reserved on the HSA because it's based on, an employee or a family amount. So if you have that family amount, you as a family can't go over that maximum. Where your FSA, you can both, ideally enroll in it all on your own and both have your own spending accounts. So that's, one thing I like to break out on the FSA. But yeah, the HSAs we're going to roll over, your FSAs don't. So those are probably two of the bigger differences besides just the, just the maximum amounts that you can elect for the year.
I know that you can't necessarily do both an FSA and an HSA because they're both pre-tax dollars and they have similar intentions. So the Congress doesn't want you to double dip necessarily. But what if it's something we didn't talk about on FSAs? Is different types of FSAs. So there's traditional flexible spending account versus child care flexible spending accounts. Can you maybe speak into what the difference of a child and maybe it's called dependent care DC FSAs if I'm remembering it right? And can you do that and HSA at the same time?
Yeah, so I mean, that is one thing that you can have together. So, your HSA and your dependent care, because dependent care, just like it is a flexible spending account that allows you to pay for childcare expenses for children under the age of 12. This can also be used for qualifying adults, including a spouse or maybe a parent that you've become, responsible for. But the dependent care, has different maximum contribution. So if you're electing, say $5,000 for, your child's daycare, having an HSA has no impact on that because again, the dependent care is specifically for, child care or spouse care or family care, if you're taking care of that family member. So they're not going to cross paths in the world of covering medical expenses. These are simply for, to be able to provide a benefit for you while you're working so that you can utilize a service to, whether it's a daycare for your child or, an incoming, nurse or a babysitter or an au pair. So that's completely separate and segregated from the HSA. Now, HSAs in limited purposes. So limited purpose is also another type of FSA that I'll touch on real quick. So this is what it is. It's limited flexible spending. So as it works very much like the flexible spending account, this one's limited to your dental and vision. So this is something that you can use and is often elected along with an HSA, because this is allowing you to keep those HSA funds strictly towards your medical costs, where you can elect and contribute on your own in a pre-funded fashion for dental and vision expenses. So you can keep your limited FSA strictly for those out-of-pocket expenses significantly towards your dental and your vision. And those can be together. And if you are using a debit card, like we've touched back on the past, is you can actually have both of those on your card. So the card is sophisticated enough to know whether you're going to a doctor's office or you're picking up, eyeglasses. So those are two that you can absolutely use together. FSAs and dependent cares can be used together. Again, totally different purposes, totally different purse of money of what you're spending those on. So that's just to kind of high level highlight the difference of those types of plans and what can be used together.
So that's important, because I think one of the things that intimidates smaller employers, they want to be able to provide these kinds of benefits to their employees, for attracting talent, retaining talent, and just because they care about them, they want to be able to provide some benefits. But it's scary because there's so much the education component. If they don't understand it thoroughly, how are they going to explain it to their employees? But when everything can truly happen on one card, both FSA dollars and HSA dollars, it really just takes the mystery out of it for the employee, which is the important component here.
Right. Yeah, and again, that goes back to my education. I mean, this is all stuff that, generally gets explained, during open enrollment and renewal processes. Brokers are great at advocating resources to, explain this information. And, just the overall education that you get from either a third party is helpful for the employer to be able to explain these value adds that they're offering.
Yeah, maybe the last thing to talk about for important differences, and you alluded to it in each topic, HSA and FSA, but the timing in which you can spend the money versus the money goes into the account. So do I have it right, Heather, so FSA, I've got my $2,850 annual limit, and so pay period one, just got a small amount that is in my FSA account. It's not a savings account, it's a spending account. But I can spend, if I had qualifying medical expenses, I could spend all $2,850, but part of it is going to be debit, whatever money I have in there. Part of it is going to be credit, where I'm kind of borrowing from the future. Whereas HSA, I can only spend the money on A, qualifying expenses, but B, I can only spend the money that I actually have in the savings account. Is that right?
That is absolutely correct.
Okay. So I think unless you have other key differences, to me, that's maybe the most important consideration as we kind of wrap this and just talk about which one should you choose. Anything else you'd want to talk about on key differences before we go there?
No, I think we touched on the most common ones that generally come up.
All right, so the biggies. HSA is truly a savings account, no user to lose it. FSA is user or lose it. FSA, your employees can borrow from the future. They don't have to have money in the account. They can still spend it and get the tax savings. Highly predictable expenses like dependent care, checkups, annual glasses, dental, things that are very predictable. It's almost like no-brainer. HSA, you can only spend what money you've saved, but you get to bank it for the long haul. Kind of give us, what are the big buckets of guidance that you would give to employers to choose which combinations of these plans that they should be thinking about for their employees?
Yeah, so I mean, obviously the most common one is your HSA. So, anytime I understand that an employer has a high deductible health plan, it's generally the first one that I recommend, just because of the fact that it's a great savings tool. So, whether I mean, a lot of times, here's the biggest misunderstanding that employees have when they're making these decisions too is I don't have a lot of health care. I don't go to the doctor much. I just go to my annual checkups, and I don't have any kids, and why would I need that? That what they don't understand is that, again, it is a savings account. So you could just literally sit and just save and save and save, because there might be a time in the future, 10 years down the road, that you absolutely will need those funds. And the fact that you'll have this little nest egg kind of saved there, for any future issues that come up, it's great to know that you have those funds. It's almost like deciding, on a 401k, like, gosh, I really want to have money for the future in my retirement and savings. Can I afford to put a little bit away for that? Same logic in thinking goes with your HSA. So if you have a high deductible health plan, this is a great way for you to just tuck away some money, for your future. Maybe you get married down the road and have children. These are things that, that you want to think about kind of now, and that you'll have these funds that you've been saving along the way, to be prepared for those medical expenses that kind of come up out of the blue sometimes. So
Right.
that would probably be the first thing that I like to mention, and
If I could stay on that for just a second.
yeah,
So the benefit to whether young or old, new entry to the workforce, or approaching retirement, it's the tax benefit. It's whatever tax bracket you're in, that's your savings. So it's real meaningful dollars, right?
yep,
And then I like your examples. If you're new entrant to the workforce, you get married, there's new expenses. You have kids, there's new expenses. And if you're at the other end of the spectrum and you're approaching retirement, common sense, we all think no. Healthcare costs go up. The older you get, the more ailments we have, right? In specialty medicines and some of whether it's heart attacks and cancers and whatever else, some of these treatments become very, very expensive. So there's real tax dollars and there's real health reasons to do it, no matter where on the spectrum you are.
yep. Nope, that's a great way to say it. But yeah, that's probably the best example that I could give, and what I've even been providing to my own children that are now entering the workforce and are getting older. And it's like, God, if I knew what I know now, when I was 20 and 21, I mean, it's huge. So a lot of times, that's one of the things I press to employers is, it doesn't matter, you know start thinking about that stuff now, because again, it's money that you don't think about, especially when you're young. Put that away, and then doesn't feel like such a burden later on.
Right.
um,
Right. Okay, so I took you off track. What are some of the other key criteria?
Yeah, I mean, so in going with the HSA again, yeah, it's a huge savings. If they have a high deductible health plan, that's the one that I usually encourage them for. And a lot of these conversations are already taking place too with their brokers. But anytime, in my own personal circumstances, when we get involved, that's what I like to understand is, what plans do you have in place? Okay, so now you just have a PPO plan. Okay, have you thought about an FSA? FSAs, are great to use, because again, those also help you with those expenses. But again, it's something that you may not think you need it right now, but there's always going to be a way to spend those funds. So if you have upcoming FSA dental and vision expenses, it's a great value to have for your employees to be able to utilize those funds. And the FSA is pretty popular, even with the fact that there's the potential to lose it. Again, I think education is huge, and making sure that you're putting all the right information in front of them to show them how they can use their funds so that they're not going to lose it. And once I think people understand all the different varieties of things that they can use that for, it does become, a more productive plan to use. It's funny, just in a quick example too, is the participation I see, internally here with clients is that, it catches on. It's word of mouth too. It's like, hey, you're not using the FSA here. Like, do you know that you could buy this, this, and this, and this, and like you can buy it all right now, and you don't have to, wait. And then employees are like, oh my gosh, I'm going to sign up for that next year. So between education and word of mouth, between employees that are using it, it's huge, and it makes a huge impact too, when you don't have those funds, for those emergencies that come up to you, or just the day-to-day expenses that you're already purchasing.
Right.
So definitely when I'm speaking with employers, there's always something that you can use that can provide that additional value, and especially now with over-the-counter items back on, and people are utilizing those. I don't even think they can realize like how many different things they can purchase for themselves or their families, with these pre-tax dollars.
Right. Anything else that you want to give guidance on how to choose HSA versus FSA?
I think we're good. I mean, from a high level, I could talk about this all day, so sure we don't have hours. But
So maybe I would wrap with this.
yeah.
In just what we do. So if you're a regular watcher of the show, you've seen this slide before. So Assure provides payroll and tax, HR, and time and attendance software, but also HR services. Some of those services are truly HR consulting, where we are your fractional outsourced HR department. Some of them are services like COBRA administration, FSA administration, HSA administration, because the devil's in the details. But I think most employers who are sophisticated buyers of health plans and providers have been providing services like this to their employees, we'd love to work with you directly. If you are a new entrant to this space, we could recommend any number of our broker partners, where a health insurance broker can really help architect what those plans should look like, what the carriers should be, how you should be thinking about in your demographics and your geography, how to construct high deductible plans with low deductible plans, and what are going to be the best options for your employees, how much of that will be employer funded versus employee funded. Assure is not an insurance company, and a lot of that really good advice comes from those insurance brokers. So if you feel really confident in these areas and you just want to outsource the administration, we'd love to help. Or if you have questions that you want to get in contact with an insurance broker who is really an expert at helping you to manage these healthcare costs as a way that still helps to attract and retain employees, we'd be happy to refer you to those sources as well. So with that, Heather, as always, I learned so much from you. So thank you for joining me today. And thanks to everyone else for joining until next week.
Thank you.